The ASX gained a bumper 2% yesterday. How's it looking today?
Looking pretty good, Tom. Initially, it was SPI futures were showing the stock market would open lower, but it opened a few points higher this morning and has continued to rise throughout over the last half hour. The ASX 200 is up about 33 points, or about 0.5%. The strongest performer today is the banking sector. That gained almost 3% yesterday. It's up 1.3% today as well. So some good gains here from the local banks. The big news today is at 11:30 when the Bureau of Statistics releases its payrolls data, which will show the impact of stage 4 restrictions that in Melbourne, and what that's going to be having on the jobs market during the first sort of couple of weeks of July. So that's definitely one to watch. But at the moment, the market is looking good. The stock market is up 0.5%, and banks' best performers up 1.3%, and energy sector up about 1%. Tom?
And Ed, we've had a number of profit updates from ASX listed businesses.
We've had quite a bunch of profit updates this morning. The profit reporting season has well and truly kicked off now. Just want to start with James Hardie, which is a building company. They have reported their first quarter results with net operating profit of $89 million in line with the prior corresponding period. They say coronavirus did affect the property market, and they talk about how their interior products for renovating a home, sales in that sector dropped 11% during the quarter. The company's released guidance for this financial year. Not many businesses are releasing guidance, but they have. They're expecting to make a profit of $330 to $390 million. The comparable profit last year was about $350 million. So positive news for shareholders, and its shares have risen this morning on that announcement. So that's James Hardie. Then we heard from Challenger, which is a financial services provider. They had a much tougher result today, reporting a statutory full loss of $416 million. The loss was due to the value of its investments falling by $750 million, basically crippled by COVID-19. The value of a lot of companies they invest in really contracted, and that has hurt their results. They are not paying dividends at the moment, and they say the outlook looking ahead is still quite challenging, so they haven't put a guidance on when they may resume dividend payments. We also heard from Coronado Global Resources, which is a coal company. They own some coal mines in both Queensland and the United States. They had a tough 6-month period. Basically, coal sales were lower, the coal price was lower, and coal demand was lower. So all that added up to them reporting a net loss after tax of $123 million. The company said the first half of 2020 was one of the most challenging periods in the last 50 years for the steel and metallurgical coal sector. And Sydney Airport have also put out a profit update this morning. They swung to a first half year after-tax loss of $53.6 million. It's now launched a $2 billion equity raising to help it pay down debt. It says revenue was 36% lower due to COVID restricting passenger movements. The company is now also undertaking a review to restructure the organisation to cut costs. Basically, that means we can expect to see some job losses, unfortunately, within the Sydney Airport business. And just finally, Tom, the last profit update was from SCA Property Group. Its profit dropped 22% due to lower retail sales from specialty tenants. SCA Property Group has 91 shopping centres or assets under management across Australia. They say during this half of the year they helped out 600 tenants with cheaper rental, basically payments, because so many of their tenants were struggling. But the company is still paying a dividend. Its final dividend is going to be 5 cents a share, Tom.